Okay, so like Judith said, we should, that was 400, right? Is Judith still here?
Yes, it's possible.
So the equity option is 400. So 400, so therefore, the liability in statement of financial position should be adjusted by that 400. So our accounting entry now, how did we say that before? Therefore, we already said therefore before. Okay, so we'll just say, I'll just go straight to the next part and say debit So debit temporary by 400, and then we'll credit other reserves, Abi.
Yeah.
And just because, just for your reading pleasure, this one I will not have done in the exam. Just note. So note the. Oh, okay. It's not even this one. It's for the past service cost to be charged. Okay. The equity option will never go to. It will never go to profit or loss before now. That one is not a problem. There's no need to note that. That's something you should know. So we're subtracting. So our adjustments now will now be minus 400. And then it means that our other reserves, this one will still be, so I can say plus 400. This thing, I hope it will be clear to us. Do you get what I'm saying? The other reserves, we're crediting other reserves, so we're adding 400 to that one. Everybody clear about that?
Yeah.
You just say you're clear so that we can move on. Don't worry, God is,
Yes.
Lord is your strength. So that has changed to 19 now because of the two of them. So please, when I send this note, if you click on this, you'll be able to see what we did. Yeah, so it's not, the 19 is not anywhere, so that you don't start looking for where 19 is. That's what's bothering me. Okay, so we go on to, okay, then the long-term borrowing, what will be the tax base? This is a test of whether you get what I was saying earlier. What will be the tax base? Ify, particularly you that say you don't understand anything about tax, what will be the tax base for this long-term borrowing?
You said?
What will be the tax base for long-term borrowing?
What will be the tax base? Let me check.
So our long-term borrowing, we've done the adjustment. Now, what will be the tax base? Judith, you can help out. Judith, you can help your sister. What will be the tax base for the long-term borrowing?
Tax base.
$10,000.
Thank you very much, sir.
520.
It should be 10,000 still, because the taxman will recognize it at the beginning. Any movement is your business. He'll be waiting for you at the end. He's not interested in what is happening. It's you now that will now make that adjustment and recognize something in your books so that you will wait, so that you would have provided for it carrying when it occurs. So the tax base will be the same
We
thing.
explain. No, you're too fast. I don't understand.
I explained this earlier with the financial asset. I think it was with the financial asset that the taxman will look at the financial asset based on what you carried it originally, what the transaction of that asset was at the beginning. So because you recognize it at 9,000, even though you made an adjustment because of the change in carrying value, the taxman still recognizes it at 9,000. That same concept, of course, is applicable to the long-term borrowing. The long-term borrowing, the taxman is only seeing how much was borrowed, what was the value of the borrowing at the beginning. So the fact that you're making an adjustment to it is not going to worry the taxman. It's just going to recognize it still at that 10,000, the original value of it. Do you get what I'm saying now? Ify, you're too distracted, that's why.
You're too picky.
So if the carrying value of a liability is less than the tax base, what happens? What do we get? Carrying value of assets less than would have given us positive. So this will give us taxable temporary difference, right?
Yeah.
Deductible.
No, now for liability or liability.
Liability.
Okay.
So it will be taxable because it's the exact opposite of asset. If we are asset now, carrying value less than tax base would have been an asset, a deferred tax asset. But in this case, it will be the opposite for a liability. So it will just be this minus this, which will give us the liability. So it's equal to that figure multiplied by our tax rate. Now this, I've used too much space now. I'm not saying any space for this. And I don't know why I left all this space. I don't think I need to make very many adjustments since everything is on Excel. Okay, so we're almost done, I think. Okay, so we go to our employee benefits. We've discussed that already. So employee benefits, what do we do about employee benefits now? We have a note for that. So the past service cost now. Our long-term borrowing was work 2. Our employee benefits will be work 3. So for work 3 now, so the past service cost is that what you called it?
Yes.
Where's that point?
Number 3.
Number 3, okay, 3, no. Okay, that's I. Okay, yes. The defined benefit has past service cost of this. Past service cost has not been accounted for. So the past service cost would increase the liability. Is it past service? And be charged to profit or loss.
Yeah.
That's i.e. We can do retained earnings now. So it goes to retained earnings. Okay, so our accounting entry now will be debit. So we're debiting retained earnings by how much is that? 520.
Yeah.
And then we'll credit. So we're increasing our liability, our employee benefits. By the same 520. So that's work 3. So we're going to our reserves. Okay, sorry, our retained earnings now. What was original retained earnings? I didn't even write it. I just jumped it. So what was our retained earnings at the beginning?
9,130.
9,130. So 9,130.
Yeah.
So that 9,130 now we're reducing. So minus 520. Can actually have picked it from down. And then our employee benefits. Employee benefits from the book was 4,000, Abi.
Yes.
So that one now is plus 520. Okay, so that's that. We move on, but we're done. No current assets. Oh, okay, down. I didn't see down. Okay, so current tax liability. They said we should not do anything about current tax now. I think I read that somewhere. That we should ignore the effect on current tax, Abi.
Yeah. Yes.
I think we read it down. Yes. Assume that any adjustments do not affect current tax. Okay, so current tax will not do any adjustment to it. So current tax. So no adjustment. What's current tax value? Current tax.
30 is
3070.
70.
3070. Then I'll expect, of course, that we'll have a nil adjustment. So the carrying value will still be that 3070. Then the tax base too should be exactly the same thing, because they said it should not have any effect. So we'll have a 0 there and a 0 there. Employee benefits too should have ended by now. I can shift this one. Let me see. There's no working on top now. Abi?
For yeah, there's employee benefit 5,000. Yeah.
Yes, I'll just make the adjustment. I wanted to bring these things so that we're seeing them again. So I'm not seeing any of them. So I just wanted to make my adjustment because there's no number on that side, so it should not have been that far to go away from the screen. Okay, so my employee benefits, I can have closed it because nothing should affect it again. So employee benefits. So what will be my employee benefits? This is my revised now, right? So my revised should be equal to this. Employee benefits increased, so plus this. Okay, so what should be the tax base of my employee benefits? Ify?
Yes.
What should be the tax base of my employee benefits? Okay, did they say any other thing about employee benefits?
Benefits.
Oh, employee benefit has tax base here. Other receivables. Okay, we've not done other receivables. Employee benefits has tax base. Have you seen it?
Yes.
Okay, so what's our employee benefits now?
5,000.
5,000.
5,000. So that means we'll have a change. So this is liability is carrying value of liability less. Carrying value of liability less. So it should be exactly the same thing as the top one now. Let me think about that in well before we move on. Because I told you how I just think of it in only one way. I'm very straight jacket in this thing. So my carrying value of assets greater than tax base, deferred tax liability. My carrying value of assets less than tax base, deferred tax asset. So carrying value of assets less than tax base, deferred tax asset. So the opposite is the case for liabilities. So carrying value of liability less than tax base, deferred tax liability, which is what I'm having negative here. So we're fine. Okay, so we're good to go. We've done current tax. Current tax is not going to change. Okay, so I can get this figure now. So this figure will be equal to that figure multiplied by the 30%.
30%.
Okay, so that's done. I think we're on the last thing now. Other current assets, Abi? Oh, it's not finished though. Okay, so we've done current tax liability. Yeah, that's all now. Just trade and other payables, Abi. So trade payables.
Yeah.
So payables. Our payables originally was what?
$5,000.
5,000.
Yeah.
So 5,000. I'm just looking whether there's a note, and there is. The last, the
Okay,
last.
trade and other payables includes, yeah.
So it said trade and other pay accrual for compensation to be paid to employees. This amounts to 1,000 and is allowed for taxation when paid. So it's going to reduce the amount of tax they are paying. Right? It's allowed. So that means there will be an adjustment of 1,000 to our trade payables. So we'll reduce trade payables by 1,000 for tax purposes. So our carrying value, so that is, you get that, Abi? Minus 1,000, right? It's going to reduce it. So that's 4,000. Is that supposed to reduce it? Let's think about that. And then our tax base is what? Before I sit down and think about it. Our tax base. Our tax base is what? They give us tax base now. What's happening?
This one they're saying trade and other payables include an accrual for compensation.
Yes.
How does that work?
Yeah, that's what we are working on now. The tax base for the payables is what?
1 million. If I'm not saying nothing.
But there's no tax base.
No, it's not written here.
Oh, okay. I thought I saw a tax base for okay. It was just that note, Abi. Okay, so tax base will still be tax base as always will still be the same. Would be the original 5,000, right?
5,000.
Yeah.
So what do we have now? Liability less than tax base. So the carrying value less than tax base. Still the same. So it's equal to that minus that. So 1,000. So our taxable. Okay, I shouldn't have done this thing like this. Now that I'm thinking about it, I shouldn't have done it like this. Okay, but we have already done it, so it's fine. So that will be equal to that figure multiplied by our tax rate. Please, can you check that we've done everything that we're supposed to do here? We have taken care of all the notes, Abi?
Yes.
Yeah. Yes.
Okay, so I can come and close my retained earnings too. So my retained earnings will be this plus that. And I said equity doesn't have any problem, so we'll ignore equity. Let's come and do the rest now. So from here now, I can come and do my final work. So I can just say that the payables. Oh, payables. Okay, doesn't affect anything. So 4. So the allowable employee benefit will adjust the payables. Okay. But what's the other leg now? What's the other leg for these payables? That's what's bothering me. They said, but let's read what they said. There's something that is bothering me about this. What did they say about the payables? Is anybody here?
Yes.
What did they say about the payables?
Trade and other payables includes an accrual for compensation to be paid to employees. This amount is 1 million.
Mm-hmm.
It's allowed for taxation when paid.
Okay, so it's allowed when paid for taxation. So what I've done here is not correct. What I've done here is not correct. This should affect the tax base, not the carrying value. It should affect the tax base because it's your payable. Your payable is your payable. It's not affecting it. Instead, what it should do is affect the tax base. It's the tax base that should be reduced by 1,000, not the carrying value. So that adjustment should the allowable employee benefits will adjust. It should be the tax base. Do you get what I'm saying at all? It's allowable. It's allowable. So it's not affecting. It should not give you a liability. It should actually give you an asset.
Yeah.
I don't really understand it.
Now see, they're saying that at the end of the day they are going to allow. They're saying that at the end of the day they are going to allow that payable. That's 1 million or 1. Is it 1 million now?
Yes,
that
it's
1
1
million for employees, they're going to allow it for tax purposes. So it means that you're not going to pay tax on. Remember that these payables now, if you continue these payables to the end, it will trigger a tax implication. But because they're allowing that employee benefit for tax purposes, it means that you're actually having a deferred tax asset, not a liability as a result of that allowance that the taxman is giving you. So the adjustment is supposed to be for the taxman, not for you. Your payables is not reducing. It is the taxman that is reducing the hand that he's using to judge that payable. Judy, do you get what I'm saying?
Yeah, I think I'm understanding it.
Because what made me think, what triggered my thought in this is, if this payable is reduced by 1,000, then anything that reduces in your financial statement should have a corresponding leg. But there's no corresponding leg, because if I say I debit payables, I'm not going to credit retained earnings now, because it's not increasing your retained earnings. What it's doing is reducing your tax base, and tax base doesn't have any effect on your financial statements. It is just the taxman's one. It's the taxman that is removing his eye from that 1,000, not you that is reducing. Your payables are not reducing. The taxman is just removing his eye from that 1,000 and saying, I'm not going to bill you tax for this 1,000.
Okay.
Okay, so we can adjust that. So this would be nil.
Okay.
Then this will go back to 5,000.
Okay.
Then this should be 4,000 now. Oh, great Excel. They just do the work for me. Life is easy. So fine. So that's done. So I have my negatives where they are and my positives where they are, Abi? Okay, so my negatives are deferred tax liabilities. Ah, man, I did it again. Okay, so it's not hard for me to do the final adjustment now. Okay, so therefore, I can come and put my therefore here. So therefore, in the final analysis, I can do my opening liability. My opening deferred tax liability rather. Let me put that as DT. My opening deferred tax liability from the question is what? I think I wrote it up. My opening deferred tax liability. Oh, I didn't put the deferred tax liability at all. It was there now. Deferred tax liability. Is anybody here?
Right here.
Okay, so the deferred tax, did I skip it? Yeah, I did.
Yes.
3.6 is here now. It was after long-term borrowings. I just put employee benefits straight. What happened? Oh no.
Protect. No, there.
Okay, sorry. Let me remove that. Please, I'm coming. Let me remove the equal to sign. All I just want, I'll just add my deferred tax. It was careless. I don't know how I did that one. I didn't put it. So my deferred tax liability now was what? The deferred tax liability is how much?
3.6.
3.6. So I just have my 3.6. Okay, so I'll come down. I'm not going to make any adjustment to that. I'll come to this place now. I'll come down to my downstairs. So my opening deferred tax liability is how much? It's 3.6. So it's equal to that 3.6. Okay, then my adjustments. So my adjustments now will now be, so I have deferred tax liabilities. So my deferred tax liabilities, I'll go and pick all of them. So it's equal to, I'll go and pick all of them there. You know, I can just do this thing as net. I've already calculated all of them now. You know, I can sum all of them and change the sign. Because share my liabilities are the negative ones instead of stressing myself. Do you get what I'm saying?
Yeah.
So my deferred tax liabilities will be, because they are liabilities, will now be negative, and then I do some, I don't know whether that one has worked before, some open bracket, and I drag everything there. I think that would just be a cheat way. Instead, I should have done the deferred tax asset and deferred tax liability. But if I do that as this and drag everything here, because of the way I've worked them, and then close that side, I should get that. So that's that. So my closing liability now, closing deferred tax liability will now be equal to this plus this. That's that. Judith, are you back?
Yes, I am.
Okay, so what are the things we should have seen that we did not see?
I don't understand the question.
You don't understand what?
I don't understand what you asked.
All our figures down. Did you get what I did?
Yes, I did. But,
Well, your cousin, okay, 392.
Sir?
but this,
I'm fine. I'm okay.
Yes, I can hear you.
this is deferred tax liability. Is it just the summation of all the negatives that we got?
You know that